Commercial papers, we started from zero again.
Okay.
In 2009, Central Bank decided to clean up that commercial papers market. And in doing it, the market probably misunderstood the agenda of the Central Bank. The Central Bank wanted credibility into the market. So everyone sort of, left that market. FMDQ in 2013, 2014 decided to revive this market. I don't think it's a drag. From zero, FMDQ has now registered 1.6 trillion in programs. There's a lot of work because you have to go back to the corporates and convince them to consider the alternative in debt capital market financing. That takes some work. We're also looking for benchmarks. We wanted a benchmark for telco. We wanted, there's a telecommunications industry. We wanted a benchmark for manufacturing. With my colleagues, it took us close to 4 years to convince Dangote to come back to the commercial paper market. He used to be in that market, and he left in 2009. We've been talking to other telcos to come to the market. So it's easy for all of us to benchmark, the borrowing and the ratings. It's not chasing deposit. It doesn't happen overnight. So there's a lot of work to meet the CFO, to meet the CEO of these companies, to let them understand and appreciate the importance of debt capital market financing, especially if they're going long term. If you look at the size of the economy, you would expect the commercial paper market to be in trillions. But again, we have a lot of work to do with awareness, education. Some people do not even understand yet the impact of Basel III implementation. And that thing. So we're working on all this. Derivatives market is another story. People need to understand that we're talking of the plain vanilla hedging products. When people hear derivatives, they want to run out of the room. Derivatives because of what they've heard about. Derivatives are weapons of, mass destruction and things like that. But we're talking of you hedging interest rates. Because these market risk factors, interest rate, foreign exchange, they go up and down all the time. And that's not your business. What you want is to have stability in your business for the risk inputs that you use. And the best thing to do is to bring this stability through hedging. And that's the derivatives we're talking about for interest rate. People that are buying 20-year bonds, that's a person betting on inflation. But what you can do is have that person hedge. So we have our pensions in bonds, we have our pensions in treasury bills, we have our pension, whether we like it or not, linked to the exchange rate because of the store of value. All these assets need to be protected. There's only one way to protect them, and that protection comes from derivatives, plain vanilla hedging products.
Well, what's being done to create that awareness and education for people to know?
That's the work FMDQ has to do. We've set up our academy. We started with phase 1, which was e-learning. By this year, I was going to say next year, this year, 2019, we will be going to the face-to-face engagement with stakeholders. We've segmented. We have the different segments, and we will do a lot of work. Again, the board of FMDQ has decided to invest in this area. For us, when we started talking, we're talking about money. The focus for FMDQ at the moment is market development. And we have to invest in that awareness. We have to engage the Association of Corporate Treasurers of Nigeria. We have to engage with other clusters, chambers of commerce, all these areas to let them understand that when there'll be factors that lead to changes in all these market factors, foreign exchange. What you should do is to buy products that you will not even bother with that. I mean, elections are coming. We all knew elections will come. What should you have done in your offices about the things you're going to import, the exchange rate impact of that, would have been to have bought, avoid that, to have bought the OTCFX futures, which Central Bank has also bought to the market, which is now well priced and everyone is happy with the way it is. You don't sit down praying about exchange rate. You hedge yourself against it and you do your business. The contracts run for 12 months. So all the things you do between now and December 2019, you have contracts to hedge yourself. So I think it's that awareness that FMDQ has to invest a lot of its resources, time, money, in for people to understand how to react. there should be no panic in the FX market at the moment because the futures are there for people to buy.
We panic every 4 years. Well, other than trading listings and quotations on your exchange, what are the key market developments did FMDQ engage in last year?
FMDQ keeps working on market development. You know, we keep talking about making this market, the Nigerian financial markets, globally competitive. And to do that, there's some things that you have to do. Efficiency is part of it.
Okay.
So for over 2.5 years, we have been working with the central bank to ensure that we introduce straight-through processing to the trading, the secondary market of the government securities. Okay. I'm pleased to say, with my colleagues, there was a lot of work with the central bank support and the banks. The Financial Markets Dealers Association, we achieved this in June last year. So now when the traders trade, things settle seamlessly, and we're using technology for that. We also launched the green bond market development. Sustainability is a big issue. You know, we all know the challenges.
What did you call it, the green?
Green bond market development.
Green bond market development.
So I took that as underpinned by the whole agenda of sustainability. We all know what global climate change and all those things. So we need to start driving our investments to ensure that sustainable finance plays a major role in this market. And Nigeria has big opportunities in this area. I mean, we can build greenhouses, funds offshore, looking for green opportunities. They want to invest the money, but it's got to go to green opportunities. That is one message that we also take into the market. And that's going to also take time. Most of the things FMDQ invest, we invest with a focus on future, not just today. And that's why at times when people say, I have not seen it, you will see it. The straight-through processing I talked about took over 2 years to involve everyone, engage and seek their approvals. You know, one other area that... so
it focuses on development, impact and long-term solutions.
Those are the things we do. The beginning of the year, we launched the Clearing House. And this is also to help the companies and the banks manage the risk. So FMDQ Clear is a wholly owned subsidiary, and its focus is on risk management, counterparty risk management. So when parties trade, we clear for them, we mark to market. It's not too technical. But we ensure that the risk is minimized between two parties that have traded. So once they do their trades, until day of settlement, they all sleep well. These are the things you see in international markets. But talking about our future, you know, one thing we launched this year, which, if you ask me, is the most impactful in this country, is the empowerment, financial market empowerment for next generation. We've started putting kids in classes in FMDQ, teaching them about financial markets. Already, we've done this with the kids in the age bracket of 13 to 15. And this is very successful. This year, we hope to take it on to down to primary school, and then up to the undergraduates, and then youth corpers. So that sort of agenda to prepare Nigerian kids tomorrow, this is our own area, and this is what we want to contribute to Nigeria. Nigerian kids engaged Aliko Dangote when he visited Exchange Place. That's FMDQ's office. Mr. Femi Otedola was there as well, Mr. Gordon Emefiele. But the icing on the cake for the kids was they met Theresa May.
Amazing.
When she came to Exchange Place. And this, you know, leaders spoke to the kids about financial markets. You'll have been proud to see Nigerian kids talking about the commodity market, foreign exchange market, securities market, factors that affect and what we need to do. And that is where, quite honestly, if you ask me, FMDQ's impact. That's the future for Nigeria, not just for FMDQ, but that is what we're doing, and nobody pays for it. FMDQ
pays for that. That's amazing. Now, could you give us your perspective on the market outlook in 2019, especially for foreign exchange and interest rates? In addition, what's your market development agenda for the new year?
On foreign exchange, you introduced earlier the governor, Gordon Emefiele, has assured the market that the exchange rate will be stable. And I think this has been his agenda for years now. He wants that stability to come.
course.
But people misinterpret him when he says that. Putting futures in the market is a way to ensure stability of mind for people and in their, you know, in the calculations in their offices. So even if there's a shift, he has put in place a product to make it stable for people. And I think central bank deserves all the accolades on that. So in terms of the exchange rate, despite the gyrations in the crude oil price, I think the governor has promised that there will be stability. He's done that. I think the governor has put a product in the market. I think people should call their banks and buy futures up to December 2019 without betting, because whilst the governor will try and do as much as he can, and he's always done that, if there's need to make an adjustment at some point for the economic balance, they will make it. But you know, every day he puts the futures in the market for people to buy. If I were a bank, I'll be telling all my clients, this is the time to buy futures and hedge yourself. There's no stability better than that. In terms of interest rate, I think the interest rate is going to be more difficult to predict, especially with the inflation, especially with the spending on the elections. The central bank will obviously be focused on that as well, because the central banks are expected to be proactive with inflation, because if you allow it to go out of hand, it may take you longer time to arrest it. In terms of development this year for FMDQ, the repo market, you talked about repo market earlier.
Yes.
But we want to put a repo market with collateral management. When a lender has given money and has received assets as collateral, as those assets change in value, the borrower must keep topping it up and ensuring that there's no risk to the lender. We'd like to bring that market we'd like to activate it this year. The bankers, the banks and FMDQ and Central Bank have been working on it. We were meant to have gone live last quarter, but there are things to clean up. We should achieve that. We should be able to push the needle on the derivatives this year as well. We'd like to go into the Treasury bills futures, the FGN bond futures, because all those products and asset classes deserve hedging opportunities. We'll look at bankers' acceptances as well. This is an opportunity for banks again to put their papers out there, and the whole market can see their bankers' acceptances trade in the secondary market, and is a measure of their rating, and also could be tied, could be linked to their time deposits. So these are three major areas we're going to be working on. The best one that happened this year, but which really go live, when I say live, we should start seeing the opportunities, is the daily member specialist market. Now FMDQ has provided opportunity for stockbrokers and the banks to be able to deal in the fixed income market. This has never happened before in this country. So that integration has finally come, and would expect it to take off fully this Q1.